Hello, future accountants. I am making revisionary videos for PU board midterm examination based on the American rules. Anyone who has studied under American rules of accounting can make use of these videos for their midterm examination. You'll be able to understand what you have discussed, in the class, and you will be able to perform better by watching these videos. Let me remind you that this is just a revisionary video. A detailed discussion will not be done. However, after midterm from November 22nd onwards, I will be uploading detailed discussion videos on accountancy based on American rules and golden rules, so that all the students will be benefited and they'll be able to perform well in their final exam. Now, before we go into the discussion, this video will contain only the rules of accounting. From the next video, the revisionary problems having majority of the adjustments will be discussed. Now, in this video, I am going to discuss the basic rules of accounting. Now, in your class, your teacher might have told you that under American rules, we classify all the transactions on the basis of something known as leader. We classify everything as per the leader. This one, L means liability. L is liability. E is equity. A is assets. D is drawings. E is expenses. And R is revenue. You would have classified all the transactions based on the leader, that is liability, equity, assets, drawings, expenses and revenue. Now, the rule of accounting, I am going to share a trick that I teach in my class to my students, and this trick will help you understand the rules of accounting a bit better. Now, understand, my dear friends, that in the month of December, we are following the American rules, right? So in the month of December, they have Christmas celebrations. So when they are celebrating Christmas, they celebrate with much fervor and they spend a lot of money. They expend a lot of money. So December is shortened as DEC in the calendar. So we are following the accounting rules of American rules. So if there is an increase in expense, it is debit, and if there is a decrease in expense, it is credit. DEC, increase in expense is debit and decrease in expense is credit. This way you will be able to recall the rule of accounting for expenses. Now, if it is any revenue, now I'm going to discuss the rule of accounting for revenue. Now, I do not mean anything personally. I'm telling this story just to make you people understand. I'm not telling this as a fact. Now, income tax department would like to know how you earned income, from where you earned income, how you earned income, and what are the sources, how did you spend the money, and what were the means that you adopted to earn a particular income. They portray themselves less as the income tax department and they portray themselves more as CID. They portray more themselves as CID. So increase in income or revenue is credit, decrease in income or revenue is debit. So I hope that this rule will help you. This CID acronym will help you understand the rules of accounting and remember the rules of accounting. For expenses it is DEC and for income it is CID. Alright, now for assets and liabilities there is something known as tune of accounting that I'll be sharing in the next video.